Hello everyone, welcome back to Upside Down Data. Today I want to talk about risk across the crypto markets. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the markets, this is now a more fun time than it had been for the past months. Really, ever since November, we have been in this very oppressive downtrend, and it just seemed like nothing was really able to move to the upside reliably. There were just a few outliers that did have some nice bits of performance during that period, but for the most part, the market was just moving down. But now we're in potentially a slightly different situation. You know, Bitcoin has reversed. It's starting to move back up, put in higher highs and higher lows. Ethereum's also looking a bit more healthy. Some altcoins have been going absolutely crazy. What I want to do today is talk about our risk indicator, the upside downside potential indicator, and how it's assessing current risk across the crypto markets as we're seeing this rebound that we're currently seeing. Unclear how far this rebound can go, but a rebound certainly is the case. I don't think anyone can dispute that right now, that we're in at least some sort of a rally. If it only ends up being a relief rally, that's one thing, but it is a rally nonetheless. So let's start off with Bitcoin here. So I'm showing you here the Bitcoin UDPI levels across the three different time frames we look at. So we have the long-term UDPI that cares about moves that play out over months to years, so much longer oriented model that kind of reacts to things over a longer time frame. The medium term UDPI, which cares about moves that play out over weeks to months, so a little bit longer in its, or excuse me, a little bit shorter in its time horizon. And then the short term UDPI that picks up on moves that play out over days to weeks, so kind of the shortest time interval that we watch here with the upside downside potential indicator. And so with Bitcoin, we can see that the pattern is that on the long term and the medium term, it's more or less undecided. It's more or less in the middle, right? It kind of sees there being about an equal amount of upside versus downside potential that's realistic for Bitcoin. Whereas in the short term, it thinks that it's moving a little bit more to the upside, right? It's realizing upside potential, and therefore there's more downside potential that's realistic right now than upside in the coming days to weeks. But it's not a super imbalanced situation, right? You know, only at 1.18. Certainly it's plausible that Bitcoin could rally and reach or realize more of its short-term upside potential in the coming days to weeks. But it's also certainly plausible we'd see a pullback from here, or just Bitcoin kind of chilling out for a while, maybe trying to flip the current price range into support, before being able to put another move to the upside. Or in the more bearish scenario, maybe this was the local top. We're going to break down through those levels and go back down to the 30Ks. Again, that's plausible in the short term, that there's room to move back to the downside, but also room to move to the upside. So my overall takeaway from Bitcoin is that it's kind of more or less undecided, that either side is equally plausible from the model's perspective, or roughly similar in its plausibility. Okay, so let's talk now about Ethereum being the other kind of big asset in the crypto space. And Ethereum's actually been performing better than Bitcoin out of this kind of reversal. So Ethereum's up over 60% from the lows, whereas Bitcoin's up only around 40%. And we can kind of see some of that being reflected here. So with Ethereum, it is in the positives in the long term and the medium term, although I would consider the long term to be basically just neutral at that level, 0.42. Not really anything, not different enough from zero for us to really read into it too much, in my opinion. I think it's just more or less seeing there being about the same amount of upside versus downside potential for Ethereum in the longer term. Whereas in the medium term, it has started to realize some of that more medium-term upside potential, and then it's really been realizing a lot of its short-term upside potential from the model's perspective. You know, Ethereum's been going in quite an impressive rally over the last couple weeks, and that's kind of being picked up in the model, and the model thinks that we're probably getting towards the end of that in the short term. Not to say that it couldn't keep going up a bit more. You know, we're not at the extreme highs yet, but it is saying that it's in the short term time to be a little bit cautious, that a pullback from here, or at least consolidation here, would be very reasonable. And that's kind of my base case, is that I think it's most likely Ethereum is probably going to at least slow down for a little while, let its short-term risk reset before moving back to the upside. Of course, I could be wrong, so obviously none of this is financial advice. You should form your own opinions of what might happen, but that's just what I'm seeing from this data. But if that happens, that's probably just good news for Ethereum, right? That if it has a pullback in the short term, that might also allow the medium-term risk to cool off a bit, maybe even some of the long-term risk to cool off, which could set it up for another move to the upside. right? The really kind of the lower the risk is, the more room it has to move up in the next leg. And so seeing some consolidation, even a slight pullback, is not a bad thing from that perspective. It can just lead to a healthier market where you're kind of consistently turning former resistance into support, allowing risk to cool off as you do so, which then allows more upside potential to be realistic, and then to go have a longer rally than if you just go in some crazy parabolic move that just, rips to the upside, but then there's no support below it, and you just crash all the way back down. So that's the way I'm looking at Ethereum. Is I would personally expect some shorter term kind of at least slowing down of the rally, but that's not to say anything bearish about the longer term perspective. And again, I really think that with the crypto markets right now, it's a little bit unclear if we're in a relief rally that's going to peter out sometime soon, or if this is actually something that could take us back up closer to the all-time highs. I think obviously time will tell. With the really bearish macro conditions, that's one thing that we have to be a little bit concerned about. If something really kind of negative happens there, or the stock market really corrects, then that could kind of cut off a lot of these rallies to the upside. But if that doesn't happen, things remain generally bullish, then I think we could move back to the upside. So you need to interpret these based on your thesis, right? Do you think that we're just in a relief rally, in which case you might see a short-term UDPI at 3 as being very concerning, or do you just see this as part of a broader rally to the upside, in which case this could just be a kind of slow down point in a broader uptrend that's going to follow? So just something to keep in mind as you interpret these data. So let's talk now about the altcoins that we monitor across the different time frames. So I'm going to start by showing you the long-term UDPIs for all the different altcoins that we're currently monitoring. And what you can see is that, generally speaking, things are still in the negative with some kind of notable outliers, right? Or some notable ones that are deviating. So I think ZIL and Luna are the two that kind of catch the eye as being the most discrepant, especially ZIL. With ZIL, this is not surprising, I think, to see this being elevated. If you've been following the markets or if you've seen what ZIL has done, ZIL went absolutely insane over the course of, less than a week. It had, a 100% day closely followed then by a 75% day and then plus more. I think it rallied from somewhere in the ballpark of 5 cents up over 20 cents in its price. A very quick 5x for anyone who's in there. Funnily enough, I'd actually put out a video about ZIL before that happened, where I noted that if one were bullish about ZIL, its UDPI at the time was flashing at being a good accumulation zone. Anyone who did that is probably very happy right now, anyone who probably bought. Now, obviously, I'm not offering financial advice. You obviously make your own opinions. But that was just something that was just interesting to note. The UDPI was still in the negatives back before that happened. Now you'll see that it's chewed up a lot of its upside potential here when it went through that crazy rally. But Luna's also been doing very well, so I think it makes sense that it's also more elevated in its UDPI. But again, those are kind of the outliers. The rest of the altcoins are still largely in the negatives, though not as deep in the negatives as they had been a little bit in the past, which makes sense because a lot of these altcoins have been rallying nicely off of those lows just a month or two ago. So again, I think the way you need to interpret this data is just what is your thesis for what's going on with the broader markets? Do you think this is just a relief rally that's going to then lead us into a bear market? Or do you think that this is something that can take us higher? If you think it's something that can take us higher, it might be reasonable to take these more seriously and to think of altcoins as being those ones that generally offer the highest returns in those more risk-on points in the market when you're in kind of the upswing of the bull market. But of course, you're opening yourself up to risk that if this does prove to just be a relief rally and we get a big crash or capitulation in the market soon, then altcoins are going to be hit a lot harder than something like Bitcoin. So just something to keep in mind as you interpret this. But certainly, if this is a big move back to the upside, we're still in the negatives. That's still overall a good thing. What I'm going to be really concerned about if this does turn into a longer-lived rally, I'll start getting more concerned once the majority of these are in the positive, because that's the type of situation we were in back in November, for example, and then we got that huge fall off from there. Risk was just kind of too elevated across the board. There's too much realistic downside potential that ended up getting realized. That's something that I'm going to be watching myself. I'm not seeing warnings of that yet. We're still in the negatives across the board, more or less. But once we do flip into a more positive kind of regime across the market, that's when I'll start getting a little more cautious from that perspective. So if we look at the medium-term UDPI, we also see a similar story. Most things are in the negative, suggesting quite a bit of, or more realistic upside potential in the medium term than downside. But again, there's some outliers you'll notice here, and some that are a little bit different from the long term, right? You'll see NEAR popped up at 1.75, Luna again, and then ZIL obviously being the extreme outlier here up at 4.7 really kind of chewing up a lot of its medium-term upside potential with that insane move. You know, I mean, if you've looked at Zill's chart, it's kind of hilarious the way it looks. That, you know, it's totally unprecedented for Zill to have a move like that. It went basically vertical over the course of just a couple days. But then everything else is largely in the negative. So again, if the thesis is that this is a more sustained rally, there's plenty of opportunity that's being suggested here from the UDPI's perspective. And then finally, the short-term UDPI. So we've been seeing a lot of these assets rally nicely. And so here's where we're seeing more of that kind of positive regime that I was talking about in the short term. And that's where personally I would not be surprised to see kind of just the markets kind of chill out for a while at current levels, maybe slow down on their rallies, just because we are starting to get into that territory, at least on the short term, where most of the things actually have more realistic downside than upside potential. But it's not super extreme yet. Really, with a lot of these, you'll see they're hanging out close to zero, which means that it's just kind of largely undecided. So it wouldn't surprise me too much either way in the short term if we see moves to the upside versus downside. But, you know, if I had to pick, I might think that kind of a slowdown in the short term might be more plausible. But again, I think it could just as plausibly go either way. Though there are certain assets that I would be very cautious of in the short term. Zill, again, standing way out. That with that move, it really did something historically very surprising. You know, based on Zill's history, it has never done anything like that in the past. And the UDPI is reflecting that. It's saying that was an extremely aberrant move for Zill, and that a correction here seems very much more plausible than moves back to the upside. And we're potentially already seeing that starting right now with Zill, with it having a couple red candle days over the past couple days. Yeah, put in some really big kind of shooting star type candles where, you know, the wicks to the upside are massive, then got retraced all the way back down into the close. That can oftentimes indicate a short-term reversal in trend. So my base case with Zill is I'd actually expect it to correct down, maybe closer to about the 10-cent level even, where it has some support. Because really when it moves that fast above support, it hasn't had time to build it. And so I would expect Zill to give up some of the gains that it made. But again, I could be wrong. You know, Zill is already shown as doing something very aberrant for historically. Maybe it's entering into a new phase and its history is not as diagnostic. We're just going to have to wait and see. But across the market, as I was saying, with short term, I see it kind of being undecided. And so really that's kind of my overall kind of thesis on the market right now, is I think we're at a point in the market, looking at Bitcoin, looking at Ethereum, looking at the different altcoins, where certainly in the short term, I think there's a lot of indecision. I think that my best guess, or my kind of expectation going forward, is that we're going to be kind of slowing down on the rally to some degree. Not to say it's over, but we might need to spend more time consolidating, turning prior resistance into support, that kind of a thing, before we're ready to put the next leg up in the market overall. Though, that being said, I do expect that there are going to be random altcoins that are going to go crazy during that kind of process, right? That's always what happens, is that when bullish sentiment comes back in the markets, there's always going to be random coins that go crazy. Hard to really predict which ones those will be, but that tends to happen. And the ones that go really crazy, who knows? Those might be the ones that haven't really moved yet, and maybe more sitting in the negatives here in the UDPI. But again, it's really hard to know exactly which asset is going to be the one that's going to go crazy. But then I think really it comes to more of a macro thesis for if we think this is more than just a relief rally. And that's where I think it comes up to every person making their own decision. Do we think that the macro conditions, the kind of bearish macro conditions with high inflation, with the potential commodity crisis that could emerge stemming from the war in Ukraine, those kind of factors, do you think it's possible for crypto and broader risk assets to go on a big rally right now or not? I think really the answer you have to that question is going to inform a lot about how you interpret these data. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.